So Patrick, as I was mentioning a little bit earlier, we had a really strong jobs report on Friday. The vaccine rollout is speeding up. The economy continues to recover, which of course brings up a lot of fears and concerns over inflation. We've seen those bond yields really take us a little bit on a roller coaster ride lately. How much of a headwind do you think that's going to present to the markets this year?
Yeah, well, Kristin and Brian, thanks for having me. The strong job numbers were, I think, somewhat predictable, albeit maybe at a slightly more accelerated rate. But look, as the vaccine continues to roll out with nearly a third of Americans receiving at least an initial dose, which is great, the economy is reopening. And as you said, there's been some pressure in the bond market. Just to recap the first quarter, the 10-year nominal U.S. Treasury yield went from 0.9% to 1.7% or so today, nearly doubling. So, Fed Chair Powell, he says inflation is something that's manageable, and he seems to be embracing the interest rate volatility at this point. But, the Fed is squarely focused on unemployment, and so they're going to remain accommodative for the foreseeable future.
Now, Patrick, that's an interesting point that you bring up because it seems like expectations are really the key. I've been seeing a lot of literature since last Friday's report that we should expect to see some pretty eye-popping numbers in subsequent months as well. So if that is the case, is there really going to be upside risk in the market? Why would markets today be surprised off of what we know is going to be a lot of people and a surge coming back into the jobs market?
Well, you bring up a great point. I mean, can the recovery be sustained beyond this reopening surge? What we're thinking about, next week kicks off earnings season, right? So, we're curious not only to hear about earnings growth expectations, but, inflation headwinds. How will companies deal with higher proposed taxes? You led off the segment with, Yellen suggesting a higher global corporate tax rate for multinationals. And so how does that impact capital expenditures, companies investing in their businesses? How does it impact shareholder policy, dividends, and share buybacks? But most importantly, with the Fed saying that unemployment is a priority, how does higher corporate taxes impact hiring decisions, right? Do they put some of those off? Do they not hire as much? And does it become a headwind for the Fed going forward with any changes to expected corporate tax rates? We'll see. And I'm very interested to hear when earnings kick off next week.
All right. So, Patrick, it feels as if there's, quite a bit of tailwinds that are out there, but also some headwinds. And you were just highlighting, there's just a few of them. What are the biggest catalysts as you see it to the upside, but even some of the biggest risks to the downside up ahead?
Yeah, well, the biggest risk to the downside, honestly, I think is consumer inflation. I think that's something that I don't think the market is pricing in enough. We're certainly seeing signs of it. And I think for anyone who is thinking about, constructing a portfolio these days, it's why one of our bigger holdings is gold. And I know gold has lagged over the last few months, but gold is really a hedge for, debasement of fiat currencies, debasement of the dollar. Now, we're not gold bugs, but the reality is with higher fiscal deficits, I think the only way to get out of it is through inflation. And so naturally, I think you're going to see a debasement of the dollar. And so owning an asset like gold, I think will certainly hedge that portion of the portfolio. And so, consumer inflation will be a headwind. I do think that, as I mentioned, corporate taxes as well, depending on, whatever, fiscal policy measures that the Biden administration wants to put in place. Those are things people should be focusing on when they listen to calls this earnings season. I mean it.
And then quickly, Patrick, I wanted to ask about some sort of specific equities that you're focused on. I understand you're looking at healthcare and also media companies. I know with Viacom and Discovery, it's a very idiosyncratic story with Archegos. But broadly speaking, what are you looking for?
Yeah, sure. In the healthcare sector, I'd say when we look at the market today, healthcare is going to remain a leader, coming out of pandemic. I mean, things like diagnostic testing aren't going away. So a company like Abbott Labs, for example, a leader in diagnostic testing, they'll continue to be very innovative. I think that's going to create, continued good streams of cash flow. That's what we're always looking at. Companies with good cash flow, good balance sheets, and good business models. And I think someone like an Abbott certainly fits that bill in the healthcare space. Not to mention, I think in the healthcare space more broadly, as you see just elective surgeries start to pick up again, right, with a reopening, that's one avenue in that sector. And then you mentioned media, and specifically with broadcasting, I wouldn't be focusing on the Viacom or Discoveries necessarily, but we've trafficked in companies like Nexstar, for example. That's a business that's rallied going into this year. We like that business, generates a lot of free cash flow. They had tucked in, they had acquired Tribune over a year ago, and so we think that that's a business that will continue to grow. And it's an unloved business, but we think is very favorable with pretty decent tailwinds. If you think about reopening, there's higher advertising dollars with more live sports programming and the like.